Hi, IBD. I'm Meredith Heyman. This is Industry Insights. Thanks so much for joining me. When it comes to stock market themes and strategies for 2025, investors have a lot to consider. Like, what role will big tech and AI play in the markets? And how will a new presidential administration and changing political sphere impact the trading environment? Joining me to discuss 2025 market themes and trends is BlackRock's head of iShares investment strategy, Kristy Akullian. Kristy, thanks so much for chatting.
Thanks for having me, Meredith.
All right, so what are some of the major themes from 2024 that you expect will continue to play a significant role in investors' portfolios for 2025?
Yeah, so great starting point. We are really constructive right now on the US equity market, and we're leaning into risk. And specifically, we're leaning into kind of the things that have had recent momentum. So a lot of what we, has worked so far this year, we think can continue to work into next year. But, they're certainly not without risks as, we see a changing policy landscape and potentially a changing macro landscape as well. Specifically, I'll give you an example is, we definitely still think that the AI trend can continue to power markets, but we've already seen that evolve a little bit. So if we look at 2023 and the first half of 2024, that was really powered by, hardware and semiconductors. The AI trade was really specific. Since about the middle of 2024, we've seen the AI trade broaden out to include things like utilities and some of the infrastructure and the data centers that are needed to power AI. And even right now, I think we're in kind of this early innings of the next rotation of what the AI trade can mean. And it's moving a little bit from hardware even into software. So we still see tremendous opportunity in that trade. We like something. We just launched the BlackRock AI ETF. That's an actively managed fund that allows the manager to really find what that next AI trade is and really keep evolving as the market does too.
Now, you mentioned how important AI is going to continue to be. How can investors find the next big winners within that theme? And do you expect AI leadership to evolve in 2025?
Yeah, I mean, I talked about active management as being important here. I think dynamism is probably going to be the word of 2025 in terms of we're seeing the complexion of the stock market change, and we're seeing what's powering the market broaden out, and that for us is a really encouraging sign. So if you looked at the stock market returns from 2024, we all know the story of Magnificent Seven that really powered a very large proportion of them. What we see going forward, though, is that the earnings growth that we're getting from the Magnificent Seven and that small cohort of AI trades is actually coming down a little bit at the same time the rest of the market is moving up. So we're closing that gap, if you will. So we do think the AI trade is broadening. Like I mentioned, utilities is a new way to think about playing that. Active management is a new way. And then just really staying broad in the market. So it's not just a technology story anymore. I think that's an important point to keep in mind.
Now, moving on from that technology, how will a new presidential administration, changing U.S. trade policies, and the national deficit also have an impact on the stock market?
Yeah, absolutely. And the way that we're thinking about this is there's sort of the pro-growth impulses and then the ones that can actually look like risks. So if you think about things like proposed regulation, deregulation and tax cuts, I think those are both pro-growth impulses, and corporations have certainly responded to that, and the market has responded to that optimistically. On the other side, though, I think the risk category of how policy could change is we're certainly watching to see what sort of tariffs are applied, whether those are targeted, whether those are across the board, how big they are to what countries. And then the other side of it, too, is really immigration. So I think both of the scope of tariffs, the scope of the change in immigration, what we're watching for is does that have a risk of re-accelerating inflation? And so obviously inflation is something that we've been watching for several years now. It was been on a pretty benign path, but if that starts to turn higher again, I think that's a risk to the economy that we're looking for, and we're trying to be really cautious around those signposts because, like I said, we're very pro-risk, we're overweight equities right now, but we're watching to see if those things change as an early indication that you maybe need to add a little bit more ballast to a portfolio.
And more on President Trump's market policies, tax cuts and deregulation. How will that impact the market?
Yeah, I mean, it's one of those things that until you know the scope of it, it's really hard for markets to discount it in the price. So I think we're seeing a little bit of a tug of war between the positive growth impulses and maybe the positive inflation impulses. And we're going to just kind of have to wait and see once we get actual policy passed in terms of how that can be priced, because you can't price what you don't know. And so our best take on this right now is just to stay in high quality stocks. And so we like QUAL as our, it's our quality ETF or quality factor ETF. We also think that means staying in sort of large cap and not going all the way down to small cap. So that'll leave you better prepared to handle whatever policy changes come, even if we can't quite predict exactly what they'll be right now.
On to the economy. How will the 2025 interest rate environment shape the investing market?
Yeah, this is a really big one. So if you think about how how investors were looking at interest rates and the trajectory of interest rates, I think everybody, knows that we entered kind of an easing cycle. In our view, rates are probably going to stay a bit higher than the market anticipated and anticipates now even, because we do think that some of those policy changes can be inflationary. So, I think what we've seen, that the equity market in particular has been able to weather higher interest rates, particularly in that higher quality cohort of the market, like I was talking about, more so than specifically small caps or some of the junkier parts. But yeah, we do think that, we'll get another cut. We'll get more clarity from the Fed this month in terms of their dot plot. We're getting more information, but don't expect a lot of rate cuts next year. So we wouldn't be putting on a lot of trades that really depend upon interest rates coming down. I think we're thinking about them as being a bit steadier than maybe we did before, prior to the election.
Now on to more of a global perspective. How will geopolitical issues such as China's economy and tensions in the Middle East influence the stock market?
Yeah, so what we've seen this year, and a bit of our outlook for next year, is that we think this trend of U.S. exceptionalism can continue. So the U.S. economy and the U.S. stock market have outperformed kind of the rest of the world more broadly. And so we do like being overweight to the U.S., but that doesn't mean you should avoid the rest of the world in your portfolio. I think it just means that you need to get a little bit more specific. And so we like being granular, rather than thinking about the world as just sort of emerging markets versus developing markets, or just between regions. We're even thinking about countries. So we see opportunity in India as an example, which has exhibited strong growth and benefits from a lot of demographic trends as well. It has a very young population and a growing workforce. And I think can benefit from some of the rewiring of global supply chains that we anticipate to continue. So geopolitics is certainly a risk. Changing world order is certainly a risk. We think that there's room in a portfolio too to think outside of just kind of stocks and bonds. We like gold in this environment too, as being a little bit of that hedge for geopolitics, a little bit of a hedge for inflation. IAU, our ticker there, and we've seen pretty robust interest from the investors that we speak to about a little allocation being able to go a long way in terms of a hedge.
Now, Kristy, you did hit on AI and big tech right at the top, but what about other sectors to watch? Will healthcare and energy be popular industries for the market and for investors in 2025?
Yeah, so the one that I think that we see the most promise in right now. So if we're thinking from a sector perspective, we like financials. And financials have done really well, but again, we think that some of this momentum can continue. Financials can benefit from a few things here. One is that the U.S. economy continues to be really strong, and we've seen economic data even surprise to the upside. So to the extent that financials are sort of cyclically geared towards a strong economy, we feel pretty good from the macro backdrop. And then in terms of kind of the policy plays too, financials could stand to benefit from deregulation. So if that manifests itself and it actually happens, that could be another tailwind for financials. And then too, just thinking about sort of the policy, landscape from a tariff perspective, services are not impacted like goods are. Financials are not creating widgets, right? And so I think that there's another opportunity to kind of lean into that as a sector that can do well in 2025, even in spite of some of the risks that we see coming.
And 2024 was a fantastic year for the market. So what do you think is the best approach to having a winning investing strategy for 2025?
Yeah, certainly. So hands down, 2024 was fantastic. And a lot of the questions that we get as a result of that is, how much further can it go? And also, does that mean that valuations are just really high right now? We get a lot of questions and concerns from the investors we speak to about valuations. I do think that we can continue to see the US stock market move higher next year. Like I said, I think some of the parts that have been working are continuing to work, and that is where we're continuing to see growth. I would maybe bring down expectations a little bit that it's not going to be another blockbuster year. And I would say stay invested for right now, but be really dynamic about watching for risks and adjusting your portfolio as the situation and as the economy changes as well.
All right, Kristy, we'll be watching. Thanks so much for joining me. This is Industry Insights. I'm Meredith Heyman. Stay right here on IBD for more. We'll see you next time.